Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. In this video, I wanted to share some of my financial mistakes with you just so you wouldn't make the same ones. But don't worry, you'll make others. I hope you find them educational and maybe a little entertaining. Now, the first one is that many moons ago, just prior to the dot-com crash back in 2000 and something, I worked for a software company that gave us employee stock options, and I had an employee stock purchase plan as well. The company actually made money, unlike all the other dot-com companies, and the shares went up and up. However, I was working too hard, didn't look at the situation, and I thought that the current trend would continue, which is a classic investing bias. Also, I didn't need the money at the time, so why sell when the price is high? I think we all know now, in hindsight, why you should sell at the top. This next one's not really a financial mistake, but ending a common law relationship also turned out to be expensive, despite a prenuptial agreement. So getting into a relationship that's not quote unquote forever would be another mistake. Divorce costs you half your stuff. I'm glad mine happened early and that I had the prenup, because if it were to happen now, I would have to say goodbye to financial independence. I learned that it is financially dangerous to live with someone, if I can joke a little bit about that. The divorce still cost me $250,000 of my net worth that we owned together with my ex, and we were almost millionaires. And then suddenly I was back to 720,000 net worth. Ouch. It's strange how one thinks about a couple's assets as one's own, and then after the divorce, you realize that it wasn't yours after all. My third mistake was that I participated in a couple of real estate flips on properties on Vancouver Island, acting as the financier in a joint venture. While both of the flips made money, with the amount of risk, time, effort, and stress, I wouldn't do another one. Uh, they were learning experiences and mistakes, albeit not financial, but they were definitely unpleasant. Many things went wrong on these ventures, but what I should have known was that the city planning department takes 3 times longer to approve rezoning and subdivision than your wildest nightmares would ever estimate, and that many things will go wrong along the way. There's just no doubt that bad things will happen. The next one's probably a very common mistake, where I've held on to bad stocks too long. Uh, Doubling down into stocks that have gone down seems to work out about 60 to 70% of the time, but it's a disaster the rest of the time. So, for example, I've owned oil companies, and because there's a trend out of carbon energy, those companies have done nothing but gone down, and I've just held on to them. So don't hold on to something to avoid feeling wrong. Be dispassionate about it and sell it if you know it has no chance. Now, on the flip side, I've rarely sold too early, but I usually don't look at stocks after I sell them, so maybe I wouldn't know. So I hope you learned something from my mistakes. I hope you didn't laugh too hard at some of them. And as usual, if you have any requests on what you would like me to cover in the future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.